Son, you know, once you start, there's no going back.
I know.
This means total commitment. Once you begin the path, there is no leaving the path. Are you sure you're ready for that? I mean, really ready?
I guess so.
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, Bitcoin actually did fall below this support right here. We had a bounce at around 16,200, and we attempted to get above $17,000. We briefly did it this morning, but now we're sitting back below it again. But the weird thing is that you were seeing these reports about these Bitcoin whales that were apparently dumping the largest amounts of Bitcoin that we had seen in like over a month. Now, unless that represented this sell right here, you know, this little area, then what we're actually seeing is price bouncing up. So why didn't it have as big of an impact? Well, I want to talk about a few things today because obviously we know about the macro situation. We know what the Fed is doing, and it could potentially cripple the environment even more for risky assets like stocks and crypto. However, I want to show you something today, and I know it's, you know, the cool thing to be doom and gloom and talk about all the terribleness in the chart, but I want to actually go over three things specifically today, three events that are happening, stories that have come out that are extremely bullish for the crypto space long term. And there are some people that are saying, you know, maybe we could have this prolonged equity bear market, but Bitcoin may actually soon decouple in a way that most people are not even anticipating. So very, very cool stuff. You guys are definitely going to want to stick around, you know, to the end of this. And I also do have just one little bit of an Ethereum warning. So if you are holding Ethereum, there could be something that may actually trigger a massive sell-off. And this isn't any type of FUD. And when you stick around to the end and listen, I think you'll understand exactly where I'm coming from. So if that sounds good to you, you know what to do. If you're not subscribed, definitely get subscribed. Thank you so much again for everyone that has been liking, commenting, subscribing. You guys know I love you. Now, look at this. Now, this is crazy. So we actually had this white target down here, and you can see we have not moved this level. This was sitting at $16,194. Do you know what the low that we got over on the index was? 16,270. So you could see we literally just missed it by like $100. So I wasn't able to get that entry, unfortunately, but look what we're doing right here. Look at where we're sitting, exactly at this area right here, right? Where we had this candle close, these two candles, and look, that's exactly where we're sitting. So we're attempting to break above these levels, and, you know, Bitcoin ultimately does need to sort of get back above this area right here. Above this flag pattern where we had this fake out. You can see this fake out right here. So, you know, ultimately, guys, it's still possible that we could bounce around in here, but as I've been stressing over and over and over again on this channel, you know, we don't want to have a situation like what we've had back here where we just have these rising channels and then we have the dump, right? We don't want to do that this time, but Bitcoin has not been able to have as big of a rally, even compared to what we've seen in the stocks. And as I've been telling you guys, you know, in yesterday's video, we spoke about the fact that we only have about 3 weeks to a month until we get to the end, you know, of this, you know, downward sloping trend. And I still have some drawings on from yesterday. But essentially what I was, you know, talking about with these circles here is that this was really the bottom of every single major market. And that's where we're sitting right now. So not only are we sitting on the most critical point for Bitcoin, but we only have about 3 weeks to a month until we get to the end of this pattern, right? We can only bounce around in here for so long before we either have to make a break to the upside or a break to the downside. So that kind of is the scenario. But as we also pointed out, we have had a nice retest right here on the previous linear downward sloping resistance as support. So you could say that that is a minor victory for the bulls. And we've also seen a lot of shorts starting to close, right? So that's pretty much the scenario. So, you know, ultimately getting back, what are we really looking at right here? What we're looking at is trying to get and hold above pretty much 16,830. We tried to, but look, we had that fake out, right? So what you want to do is, you know, you can attempt down here if we actually get the confirmed hit at around 16,194. That's where I have longs placed right there. Obviously stop at 15,785. If you guys do want to learn how to trade, make sure that you get subscribed. I go over this every day, and I do have a tutorial popping up above. There's literally tens of thousands of dollars in bonuses below if you guys want to just Check out all the links. There's all kinds of stuff below if you guys are interested. But most importantly, make sure that you follow along every day, because every day we go over the charts. But this is some stuff we got to talk about. So clearly we're just waiting for a break either way, right? We're still just kind of hanging around in that range. But you can see right here, and I saw a couple news outlets talking about this yesterday, and I didn't really bring this up because they were talking about in the past 30 days, you've seen whales offloading 280,000 Bitcoin. Now, I mean, if you really look at it, they must be playing these ranges pretty well because, if they were offloading it here, it held up pretty well. And, there was this big sell-off right here. In fact, if we switch it, to the weekly chart, I mean, guys, look at that. Let me just get rid of all the stuff here. I mean, look at that. So it could have been this candle right here. That may have been, where we saw the whales selling off, right? But for the most part, it wasn't really as aggressive as, they were making it out to be. So I'm actually wondering if in some instances, maybe these aren't, because this is on-chain data. I mean, does anybody have proof that this was being sent to the exchanges? Or, because we've seen a lot of, money coming off exchanges, or are they just distributing it? Are they just distributing it to different wallets, right? Because you can have one whale who has 10 wallets, right? And if he breaks the chunks of, all of his Bitcoin into those wallets, well, now you have 10 wallets that all belong to one whale, but on chain data, if you're just looking at the wallets, it doesn't look like it's a whale. You see what I'm saying? So I wonder if it was just a little bit of redistribution because, yes, we had that big sell-off on the day, right? But it was basically all within a 24-hour period. So I don't know. I wasn't really fudding too much over that. It could just be they're just, moving their coins around. One thing we have seen, though, is stable coins, $3.2 billion combined outflows, all getting pulled off of Binance, which accounts for 66% of stablecoin outflows. But, in one hand, people are like, oh, all these people are pulling all their funds off of Binance, right? Oh, the FUD. But also at the same time, Binance hasn't had any withdrawal issues. I mean, I don't use Binance, but I haven't heard of any issues from anyone. So again, I'm not saying keep your coins on the exchange. That's not what I'm saying. But what I am saying is it seems like thus far Binance has been able to one-for-one back all of the withdrawals that have been necessary to come off, considering we've seen, 4.8 billion, ultimately. So the thing, though, that you will notice is that the open interest is down significantly right now, which generally tends to mean that there's money leaving or there's less speculation, right? And you can see right here on this chart, we had a little bit of a spike, at the CPI interest, but now we're down almost 9%. And, we're sitting at some pretty low levels that we haven't seen pretty much since around, June and July of this year. And then before that, levels this low, pretty far back, guys. Pretty far back. Now we're going back into 2020, 2021 area. So there definitely is a lot of fear in the space surrounding crypto, right? But it's not all doom and gloom. And that's kind of what I wanted to point out today. Every single news outlet is just screaming bearish, terrible things. And sure, we could go lower. We've talked about it, but there is sort of a silver lining. That's what I want to talk about today. So you have Grayscale. And remember how their discount was around 48%? It's actually gone up to about 46, which means that it's actually getting a little bit smaller, right? Not by much. I mean, if you look at this chart, it's still going down a lot. It could have been because maybe they revealed that they were going to return up to 20% of their capital to shareholders if they couldn't get an ETF. I don't know, maybe that affected it right now. But the big thing that's really affecting everything is the Fed, the macro environment, right? Seeing Bitcoin in an actual macro bear market, right? We've never seen Bitcoin in a real bear market traditionally, right? It's always existed during quantitative easing. So that's what's making this narrative a little bit different. But nevertheless, guys, I mean, have a look at what the dollar has been doing. I think that the dollar definitely did have its peak right up here, and it's been falling out of this channel, and now it's even putting in a downwards consolidation channel, and it doesn't look like a falling wedge. It looks like an actual legitimate channel, kind of like, what we saw Bitcoin basically doing for the majority of the year. So let's start out with why everyone is so negative. And then, we'll get to why I think there's a lot really happening in the background. So, they talk about the Federal Reserve strategy, hiking interest rates, and it's going to continue. And obviously, this is going to be difficult for the crypto community. And they say that for crypto assets to become the hedge against inflation, the industry needs to explore ways to decouple from the traditional markets. Now, recently, believe it or not, We have decoupled a little bit, but it seems like we've decoupled negatively, right? So basically what we've been seeing is stocks pump, Bitcoin maybe little bit pump, stays neutral, stocks dump, and then Bitcoin maybe little bit kind of, falls down. It's really weird, actually, how Bitcoin is not really responding to anything. So, this was an interview from a while ago, but you guys might know Mike McClone. He's over at Bloomberg, and he was talking about the Fed's sledgehammer that has been pressuring crypto this year. He believes that the Fed's policies could lead to a crash that is worse than that of the 2008 financial crisis. And this is the video from Kitco News. But, basically he goes on to say, though, that he does think that Bitcoin will decouple from the stocks quicker and recover, and he sees a 100,000 Bitcoin on the horizon maybe in the next 2 to 3 years. In fact, Gareth Soloway, who I'm sure you guys know, you've probably seen him around, right? He makes a lot of calls as well. He's calling maybe for 10K, 9K Bitcoin. Even he thinks, although we're going to go in a decade-long sideways bear for traditional markets, thinks that Bitcoin will be seen as that hedge, and why is that? Well, if you just think about it, people are looking at stocks, okay, bonds, precious metals, okay, gold holding up all right, but basically the same price it was 10 years ago. So if gold really hasn't moved in 10 years and inflation is up, at the highest levels that we've seen, was it really an inflation hedge? You know what I mean? Whereas, yes, Bitcoin is down, but Bitcoin is known for falling 84, 90%, only to then have like a 10x rally after that, right? So obviously the Federal Reserve is intending to create a reverse wealth effect so that investors reassess their crypto portfolios. They want to create a precarious market situation by slowing down demand, but also they want to be careful to avoid any chaos. So the current market scenario demonstrates that crypto asset prices are entwined with equities and stocks. It's imperative for the crypto sector to distance itself from other traditional asset classes. But, and here's where it starts getting cool. Fortunately, a U.S. central bank report suggests that the risk perception towards crypto is gradually changing. According to a Federal Reserve Bank of New York report, cryptocurrencies are no longer in the top 10 most cited as potential risks for the U.S. economy. This reveals an important change in the investor mindset, demonstrating that crypto will eventually become a non-risky asset class. But that won't happen if crypto continues to follow the legacy financial model. To beat inflation and offset Fed policies, the crypto industry must embrace decentralized finance for a robust economy. And you even have Coinbase's CEO Brian Armstrong asking regulators to target centralized crypto entities when it comes to industry regulation and to just leave the DeFi alone. He also calls for leveling the playing field of enforcement, as it's an open secret that a handful of questionable actors are not following the rules. And, I guess I do agree with him, leave DeFi alone. Although I don't agree with Coinbase at all, specifically since they still have my account blocked and I keep giving them all the paperwork that they ask for and it never seems to be good enough. Coinbase, can you please let me use my account? If not, I really don't care. There's other ways to get stuff out. I haven't used Coinbase in like over a year. I actually don't care if they instate my account or not. I just think it's ridiculous. But anyway, that's a little bit of a ramble, guys. Yeah, Coinbase for some reason doesn't seem to like me. I don't know why that is. Anyway, so let's talk about some of the big news though, right? So we're talking about the fact that we're seeing, for example, right here, this report saying that crypto is no longer cited as the topmost, potential risks for the U.S. economy. And you're also seeing a lot of integration and excitement for it. This was huge news. So I'm sure everybody watching this knows Visa. Payment facilitator Visa has posted a technical paper delineating plans to channel Ethereum functionality for customer auto payments. So they're reportedly planning to let customers make auto payments from their Ethereum self-custodied crypto wallets. According to the payment giants, crypto users would someday be able to automatically pay their subscriptions, video on demand, telephone, electricity, etc. And in addition, they stated that the automatic payments would be on a recurring basis so that customers are no longer, so you don't have to basically initiate it every time. And actually, that's something that Polygon Matic has also pretty much done is Dagger. I don't know if you guys have heard of that. It does like automatic payments and stuff. So the fact that Visa is willing to do this and it says self-custodied. So, unless I'm misreading this, that seems to say that you can keep full control of your private keys, but integrate through Visa. Pretty big stuff, guys. The second thing I want to talk about, very, very big, is the Bank for International Settlements, or the BIS, has now allowed banks to hold 2% of their reserves in cryptocurrencies, as per their recently released Prudential Treatment of Crypto Assets Exposure Report. Now, keep in mind, before that, they only allowed a select few banks to hold up to a maximum of 1%, whereas now they're saying all banks can hold up to 2%. And I think this number is only going to grow over time. And this goes to show you that obviously it is being viewed as less and less risky, right? Now, obviously, yes, when it comes to these centralized players, and if you guys, watch my YouTube short, or you're over on TikTok or Instagram, which, guys, go follow me on TikTok, Instagram, all the links are below, you would see that this is what I was saying when I was speaking at Decentral Conference. Separate the centralized from the decentralized. Bitcoin is not FTX. Right? Crypto is not Sam Bankman-Fried, right? Those are centralized entities, right? So this is really cool, and this policy is going to be effective January 1st, 2025. I know that's quite a time away, but, considering the halving, 2024 could be right on schedule for that bull run, right? Still am anticipating that. And then also, we have this other news that the Nigerian, it's so funny, yesterday I had nothing to talk about, and today there's tons of things. The Nigerian government will reportedly soon pass a law that will recognize the usage as Bitcoin and other cryptocurrencies as a mean to keep up to date with global practices. Now, this is interesting because if you guys remember, 2 years ago, almost exactly to the day, they had banned cryptocurrencies, right? So now you have Chairman Ibrahim, basically saying that during the second reading, we need an efficient and vibrant capital market in Nigeria. For us to do that, we have to be up to date with practices. The report stated that if the Investments and Securities Act bill is signed into law, it would allow the SEC to recognize cryptocurrency and other digital funds as capital for investment. So he does just come out and say it's not a full 180, but rather a secondary review of what is within the scope of the CBN's powers. So again, we're seeing that loosening, we're seeing that embracing of cryptocurrency, we're seeing it decoupling, although maybe not really in the way we want it to right now. We want it to go up, not sideways and down, but nevertheless, the regulation will come in. And, I kind of take both stances. Does crypto need regulation? Bitcoin does not need regulation to work, to do its thing. The protocol is fine. Monetary policy is fine. But unfortunately, there's a lot of dinosaur investors. There's people in the traditional space that do not want to trust their own keys. They don't want to hold their own private wallets and all that. So they are going to rely on, unfortunately, these guys like Fidelity, JP Morgan, Goldman Sachs. You guys know all the original stuff, right? Now, I just wanted to give one quick warning to some Ethereum holders. You may know about this, you may not know about this. If you do, well, then I'm sure you're aware of the risks. But as CryptoQuant has pointed out, this could trigger a full-blown Ethereum correction. Now, here's why. So the catalyst is the dramatic increase of inflows into the ETH 2.0 deposit contract, where staked Ether is trapped until the next upgrade, right? So if you think about it, right? Something that, and if you really look at where Ethereum's kind of just been chugging along at the same area, right? Around that $1,200 range. And you would think that given the decline in Bitcoin, you would normally see a bigger hit for Ethereum. Now they're saying it's because all of this Ether is locked up, that even if they wanted to sell, they couldn't sell anyway. But March of next year, which is when they're aiming, right, for the Shanghai fork, this will allow you to withdraw your staked ETH, right? There's a lot of them that are on centralized exchanges as well. They're saying there's around 18.9 billion worth of Ether currently at the time of writing this article. So if all of that Ether was to get unlocked, and these people who have been staking it, now maybe they won't, maybe they believe in ETH and they want to stake it, right? Because they believe in it. But maybe, if they need to pay some bills, or they just kind of don't believe in it anymore. I mean, who knows why people sell? This could be a big deal, having that much Ethereum hit the market. Now, this is nothing you need to worry about immediately. This is obviously not happening until March of next year, but it is something to just think about, okay? So I just wanted to kind of point that out there as just a public service announcement, right? Also, why might people sell? Well, there's the fears, Binance hinting, or Reuters hinting at dark secrets surrounding Binance and its reserves. We're hearing a lot of FUD, all these other things. You had crypto asset manager Wave Financial. They pulled their clients' funds a couple weeks before FTX went down. And you had the CEO, David Seymour, basically saying that our expectation is that there are a whole bunch of others, some of them even in the top 10 exchanges, that are probably functionally insolvent as well. And we're just sitting around waiting to see when they blow up. In fact, they're saying that they're snapping up acquisitions for near zero as they're taking advantage of this, right? But nevertheless, we don't know. We don't know what else is in the space. I think the majority of it has unraveled. I don't think Binance is insolvent. Personally, they've been around for so long, and they've been able to go through multiple bear markets. I mean, this was FTX's first bear market. They couldn't even do it. Right? Binance, they've been through bear markets, so I think they've kind of shown their resilience. But again, you never know. But then don't forget, we do have the Genesis situation and how that could tie into Digital Currency Group and Gemini. So that is a possibility. Now, you might have seen that there's a lot of like BitBoy and some other people are down in the Bahamas right now for Sam Bankman-Fried. I was invited to go down to the Bahamas, but unfortunately I have a lot to do up here, guys. I do a lot of things outside of just cryptocurrency. So I would have loved to have been in the Bahamas, but I couldn't make it down this week. But nevertheless, I guess they said that it was a pretty dramatic day in court. You had Sam Bankman voluntarily agreeing to be extradited to the U.S. They're saying that this is because of the terrible conditions in this Bahamas place where he was staying. I guess the facilities are not that nice down there. So the court session in which he was expected to agree to extradition lasted only 10 minutes, thanks to a public outburst. Jerome Roberts, a local lawyer who represented Sam, said that the court session happened without his knowledge and things were moving prematurely. Roberts asked for a 45-minute break to confer with Bankman-Fried in what the Washington Post described as a heated presentation. Wish somebody had this on camera, but you can't film in courtrooms, right? Or can you? No, you can, right? You just can't show the jury. I don't know how it works, but U.S. prosecutors requested additional time to speak with the clients. This was met with criticism by prosecutor Frank Lee Williams. Bankman-Fried had initially fought extradition, but yeah, they said poor standards at Fox Hill. Just look up Fox Hill, guys. Just right now, Google Fox Hill, Bahamas, prison, whatever, and I think you'll see why he wants to come to America. But to end on some kind of good news, people are worried about Binance, but they did win the bid to secure Voyager's assets, with the bid worth nearly $1 billion. The customers of the defunct crypto platform will be able to access their crypto on Binance US after the completion of the acquisition deal. As part of the bid, the American crypto exchange will make a deposit of $10 million in good faith. Additionally, Binance US will bear Voyager's expenses up to $15 million. So there you go, guys. I mean, it looks like if you lost funds on Voyager, you should be getting some of those back. Unfortunately, they're probably going to be in the coins, not in the dollar value, so, obviously crypto prices have fallen, but it's better than nothing, right? So that's basically it for me, guys. And again, just kind of having a look. We did have a really big sell-off right here, but if we put back on these levels, let's get it back to the daily, you will see that we are rejected. And the reason that this area sucks to be rejected from is because this is where we had this major consolidation where we were putting in this flag. We had the breakout, and now the bottom of the flag is acting as the resistance, right? So we could be looking for another retest down around, like I said, that 16,194 area. I do have a long there, and again, if you do want to learn how to trade, make sure you guys check out the tutorial popping up above and below, and make sure that you get your coins off the exchange. Make sure you get them on a ledger. I do have a Ledger Nano X tutorial, and of course, if you guys are interested, Ledger Stacks is coming out. This is really cool. I've already ordered mine. Super excited for this. I'm a full believer in self-custody. I only keep just enough on the exchanges that I'm willing to trade with, and when I tell you guys, it is like maybe 1.5% to 2%, if that, not even that much. So be safe out there, guys. Thanks for coming back. You guys rock. Make sure that you check out the videos popping up right here, right now. Until next time, stay crypto. And of course, peace out.